Hello guys, glad to have you on board again. Today we're going to do and take care of weekly time frame kind of analysis. So swing trades, no intraday in here, or at least not too much. I've already made a forecast on those time frames regarding cryptocurrencies right into TradingView. So I'm going to make kind of a sum up information in here, a quick one. But if you want to have more details, I invite you to have a look at this TradingView ID I shared just yesterday. So let's get it summed up right in here. So what I expect to be doing in the forthcoming days is still, we had a tiny demand out of 9.7k. It's been executed. When I'm talking about demand, I'm talking about this thing, which is the order book. So there were pending orders out of 9.7k's a few days ago, and my question was whether we get there first or not. But now that we've done that, I think there's nothing to go higher. Next level is 10.2. It's really fucking far, and as you can see, huge, freakingly huge demand cluster out of the 8.8 area down to 8.4k. Huge demands in here. So if you think we're not going to go there, you're probably wrong. So market makers have so many orders to execute in this area that we're very likely going to go down this road, whether you like it or not. Anyway, this cluster is a very dense technical area as well. If you have a look at the 4-hour charts in the BTCUSD T chart, now I'm having a look at Binance numbers in here. So the thing is that what we have is a gapping structure below context, previous market open. So this is previous month open, so it was June's open in this price. So June's opening price below context, futures gap to close. We've got this, which is a range, or at least it's a breakout target. So we know that if we go down this target within 50 bars, all right, this target generally is supposed to block prices for at least 50 bars. So as you can see, this is the 50 bar time frame. So normally it's 40, all right? So let's set things straight. Normally what we have is a market that is somehow blocked. God damn it, I'm gonna make it. All right, somehow blocked from there to approximately there. Let me just, sorry about that. All right, so let me just zoom it out. 40 bars, no, it's even more than that. All right, so 40 bars would be there approximately. All right, so normally we can't cross this area during this time period. So normally we shouldn't be able to break down this level until next week. But I feel like we will, whether you like it or not, because we got probably, we've got very few signals of a range in here, more likely signals of trending. We fucked up the context and stuff like that. And like we said, like I told you, all right, we've had a bubble going up, so don't think we're going to just range in here. It's still possible, but less likely going to happen. We are preparing for a squeezing structure in here, so it is not about time to sell the support areas, to anticipate bearishness. It's more likely to say that below those supports, we've got a huge demand. So for now, odds are still for us to get there. It's still hard to say as well, because we can have reversal out of those extreme shifts from demand, which means we might be so much lacking of bears in the market, of bearish demand, that we can try to rise price to get the bears to try to getting in. So I can't say if we're too hard into too much bearish demand, all right, or bullish demand but on lower prices. And sometimes the market can try to wrong foot those patterns. So I don't know if we're yet at that point, or if this is just too obvious and we're going to have to go down. So expect potential reversals in here, but normally this structure, whether you expect it or not, I can see people hesitating. I don't see a bearish consensus out there, which is really what I like. If too many people were there selling to anticipate prices to go down 8.5k, I would say, all right, something goes wrong. And I'll probably have to go buying these prices instead of trying to remain selling. So the thing is that I see people hoping for us to buy this area and maintain this previous low and break up resistance. That so far I don't see any risk of huge reversal. Let's just have a look at the long versus short. So as you can see in here, no huge differences. All right. So out of speculators what I would have hated to see was to see the bearish demand, all right? This goes straight down, like absolutely no more bears trading the market. This one surging and absolutely no bulls. If we had such thing, I would really have been concerned, because that would have pretty much signaled that we very likely would have been building a bottom. We don't, so I see kind of balanced trading activity, which means, all right, I'm fine with that. I think definitely we can follow up on technicals for now. I don't see a huge psychological pattern set in itself. So for now, I think technicals are at play. Very likely going to work out this area sideways. We had a 9.7K area who's been executed, which means, all right, now we've dealt with it. It's either we go higher and there's no more demand before 10.2K, or we just go down to the very big area in here. But once all those orders will be executed, question is, what are we going to be doing? In here, there is clearly a support area, a nice and dense cluster. You've got the H1 time frame support. You've got this old price below 4-hour context, stuff like that. So I think if we go there, I don't think we're going to last long. To be honest, I think we could do something like that, like getting in here, trying again, bursting. But I don't think we're going to maintain multiple candle closes below this target. I think we're just going to surge to this price, go to search for some profit taking, execute all the orders in the book. It's probably going to create a spark in volume, and the question is how we're going to be doing after that, because if there is no support in this area, all right, if we don't quickly go there and reintegrate, then there's not even a chance for a range, because if we go in here and if we fall like shit down to 7.2K, which is possible, all right, then yes, I think this option might be possible as well. All right, that's the big danger. If we go there and if we find no bulls to support prices, like I said, I personally, I'm a bear, so I won't profit take in this area more than 25%, unless I've got some strong signals that the bulls are taking over, like exit signals in the shorter time frames, huge volumes and stuff like that. In that perspective, I would definitely profit take. And get out of my bearish entries. But so far, all I can see is a bleeding market with people hoping for this to build a support. And I see so much analysis of people trying to figure out why the hell we could build a support out of here. Most of them standing by this. This is a previous resistance, so it can now act as a support. And if we actually build a support out of here, then we're going to have a strong bullish outburst straight up to 20K by the end of next month. Oh my goodness. Yes, still, that is possible, but very less likely going to happen, because technically speaking, what we have in here is a bearish movement cycle, is a bearish cycle with a bearish momentum. So, oh my goodness, normally we're breaking down support in such context. So, don't be too much bullish right now. Really seems to be not a good plan. Absolutely no bullish signals in here. The best we've got is range, and we're back into that support. So, I very likely think that we're going to break this one down. So patience and resilience if you're a bear. All right, just risk manage. It's not about time to sell the support before it actually broken down, but more likely, all right, keeping the pace, still being bearish, and simply waiting for the support to break down. If it is, then I think huge area in here to watch out for and see how prices react after trading all this volume. And if the market doesn't react, then it's a straight line to 7.2K. And in here, anyway, whether you like it or not, if you're a bear, you need to get the fuck out, which means in here you need to profit take. Starting from 7.9K down to 7.2, all right, 7.2 to me is a mandatory profit taking. We go there, I'm out, no questions asked. All right, that would have been my job. Selling starting here, profit taking in here. Next buy and hold is going to be in this area to me, but in here I don't want to be selling, which means, remember, I was bullish, I still have 0.95 BTCs to the upside. Now I'm fully hedged. I was 0.65 BTCs until yesterday. Now, yesterday, I've been, 2 days ago, sorry, when we broke down this level, I went down to the 1 Bitcoin. So now I'm fully edged. I've got 1 Bitcoin to the upside, 1 Bitcoin to the downside, but to 2 different time frames, all right? Really important for you to get that. I'm now fully edged, so which means I don't know what the fuck is going to happen with Bitcoin. All I know is that I am not exposed to Bitcoin changings for now. I'm as bullish as I am bearish, but I have far different targets and time frames and time scales for those trades. For the bear ones, we go there, I'm out. We go in here, I see bullish signals, I'm partially profit taking almost instantly. All right? So, like I said, this area, I'm probably going to take 25% no matter what, and I can go up to 50% profit taking if I see some strong signals like exits and stuff like that, and volume, obviously. Like I said, also, I'll probably buy some Ethereums instead, all right? So instead of getting to buy Bitcoins on this support, I'll probably very likely buying Ethereum. I need some signals, I need some volumes as well, but I'll tell you whenever I'll do it. The area I've been targeting right now is 180 down to 160. And I'm favoring 163 where there is a little bit of volume. So this is the area in which I'm likely going to buy Ethereum. Remember, that was the plan, buying those previous resistances. That's the plan I have on Bitcoins as well, but I think they will hit the levels in a different scale. Like Ethereum might be getting some support in here, surging one more time, so possibly an alt season. Like I told you, I'm basically having a look at how the dominance works out in the forthcoming days, how the volume looks like. All of this is explained in the Trading Views video. Anyway, that's it for cryptos. More than enough, more than 10 minutes, and I didn't want to spend that much on this. So, conventional markets, let's call it that way. Huge week ahead, lots of things going to happen. We've got the ADP NFP combo coming along the way. We've got 3 central banks. We've got the Bank of England, we've got the Bank of Japan, and the Fed all throughout the week, just right after the ECB last week. So it was the couple days of fully central banking. This on top of earnings release, but most of the big names have been showing up their numbers already. But still, what we have coming along next week that I pretty am concerned about, or at least I like, is GE. All right, General Electric's going to publish this week. Let me just show up the actual calendar. All right, so nothing interesting today. Tomorrow is going to be Apple after the close. All right, the big names. All right, and then this is where we got GE as well. Is going to show up on Wednesday prior to the open. This is important. All right, GE is going to publish, so we got to anticipate and see if we have early signals of GE activity throughout Tuesday. We're going to have to analyze this one. It's really important. We're probably going to be doing this tomorrow instead. So Apple tomorrow. After the candle close, we've got EA, really interesting to me. I'll see if I want to be more short on this one, or if this one's going to trigger a deeper pullback to get us better prices to short. That's pretty much all I have in terms of interest in those markets. Qualcomm, but I'm not trading this one. All right. Verizon, I don't trade this one neither. Right, so this is what we have. So most of the things I care about I've already been publishing. All we've got left is Apple, but I don't nearly expect Apple to show us good numbers at all. So if Apple were to be disappointing, then we probably can expect some huge pullbacks. Because in terms of Apple, all right, let's have a look at how this price, if Apple somehow disappoints, we're going to probably gap down to 190. So it's probably like in here a 10% drop, all right, almost instantly, because if the numbers are not good, we're going to gap down, which means we've been first wave, second wave, and in here we probably can expect a third extended wave. All right, so this would be 1, 2, 3, 4, 5. All right, in terms of price structure, this will be an extended wave, classical 1, trending 4, 5. We get to target and terminated it. All right. Classical ABC correction, and then we see afterwards either we do just a hope phase and we fail, and bam, this would mean a crash. All right, this means the value will crash down to $90 and stuff like that, and die in here for years. All right, low volatility, buy and hold, and eventually afterwards we get to buy Apple again. But these are where the two prices we want to buy in Apple. To me, I think 110 is definitely a support area that I don't necessarily want to be hugely selling. But I think if we fail in here, it means we're going to gap down on a third wave, which means it's going to be the trend wave, which means the gap will very less likely going to be closed. It's a breakout gap that will trigger reinforcement to me. So if we fail on Apple and Apple gaps down, I'll definitely reinforce the day right after, immediately. Lower the stop loss and selling almost instantly. Even if we gap down 10%, I'll sell the shit anyway. So it's a basic standard move because I don't know what the fuck we're going to be doing. If we gap up, it's probably as well a 10% gap. So this thing has huge potential both ways. So I know I'm taking some risk. I've already taken quite some gains on Apple, which means, yes, I do have some bearish exposition in there. I'm ready to fire again if anything goes not according to their plan. But until then, I don't know either if there's not some bullishness down the corner. If that's the case, then I'm fucked. I'm going to take some losses. But still, that's not a loss, because I'm just going to give them away part of the gains I previously took away from them. So that's not the worst case scenario. Still, I would pretty much like a good scenario for me. Anyway, so others have been fucked, like, all right, Facebook, it doesn't really look good, not to say it really looks bad. They tried hard, even with the numbers not being that bad. Probably another set of bearishness down the corner, pretty much another dead cat bounce structure, very deeply, because we're not supposed to make 85% retracement, but still, bearish momentum, bearish divergent. We already broke the previous support, so down in here is divergence, generally pulls us back to support. We've got so many gaps in here, so I think any reversal in here is going to be like a magnet, attracting prices to fill those gaps, and once those ones will be filled, if we fail to find a support, if Apple's and if all the good names are falling, do you really think people are going to be buying Facebook? No, they won't. So that's exactly the same problem. We've been buying bulk assets, and people will start selling bulk assets as well. So it's more like whether the US will be the saver or US will be the one to fall, the last one to fall, but the one to fall the hardest. So it's really is two visions of the world fighting each other at the moment, but people bulk buying or bulk selling, which is, I think, the worst thing to do. I think right now what we should be doing is targeting some specific assets with a risk management and doing the job, which means there are some assets who've been stop lossing me, some others are safe, some others are hesitating, but I think so far I've done some good job, and I still stand on this. So pending validations coming from those assets. Anyway, like I said, central banking week ahead, so it's not just about equity pricing. I can't tell anything about whether or about where the stock market is going. I mean, everyone is pretty fucking lost, and we are in this new paradigm that, all right, macroeconomics, we don't give a shit. Asset pricing, we don't give a shit. All we care about is how much dirty money are we going to get next week and next month and out of the next quarter. It's all the market cares about. How much liquidity can we have to sustain the unsustainable bubble? So that's how it is, all right? It's unsustainable, but can we push down this to at least 2 to 3 months? It's exactly the questions we're wondering right now. Can we push this thing up to November, December, up to the next Fed active meetings? Can we do this, or are we already breaking the toy right now, right here, right now, with a volatile summer, and we're going to have an ugly September and November down the road? That's exactly what I think is about to come. All right, so we don't know because it all depends on how people will perceive the Fed meetings committee. All right, so that's a big problem because that's not how the market is supposed to work. I've never seen this in my career, but still, I've never traded new paradigms as well. So I'm discovering this. I'm definitely taking the biggest lessons I took recently, and I'm definitely learning a lot right now. And you can be damn sure I'm going to be way more effective by the next economic cycle because I'll have the experience of those patterns, which I don't so far. Which means this is why also I'm taking some some losses right now because the market isn't technical. We know the market is pricing some other stuff, is dealing with anything else but technical. So this is obviously what my strategy is suffering right now. Like I said, my account is not crazy bullish this year. It's probably the worst year I've ever done. I still have some money in the table right now, but I'm basically flat for a month, and it never happened to me. This year started like roller coaster, huge gains in January. Early January was huge spikes of gain. With the yen, all the yen scenarios validating altogether, the US stock market falling like shit. So it was hell of a end of 2018 going to 2019, but still afterwards huge stop losses triggered, 10%, more than 10% stop loss triggered on the US, stop loss triggered on the euro dollar, on the GBP USD, soon to come on the euro dollar. So lots of invalidation. AUDNZD is still freakingly logging, and I can't get this one to trigger. Same thing, all right, been paid in here, nice profit taken, but now, oh my god, pain traded for so long as the market just can't find a fucking support. So I just need some things to balance to get to turn that portfolio into a very nice gain this year, but still it is freakingly logging and delaying every fucking time because of this new paradigm. We just want to make things look great by the next month. That's all we care about. Short term, making it, pushing it further away and further away and further away, or hoping that the shit won't hit the fan. It really is what we currently are trading. That's dangerous once again, but still, I have confidence in my vision and my scenarios. At least as long as I haven't been proven wrong, I'm going to keep on trading them. So as you can see, AUDNZD, bullish divergence on the daily charts. We've made new lows, but not in the momentum. I'm safely expecting the moment will get, bam, bullish burst, breaking out of the resistances as well. You see, that's the topic we are right now. That's the reason why I'm using the RSI for at least a quarter right now, I think, because people are not trading rational, they're not trading prices, they're trading the goddamn fucking momentum. That's not how it's supposed to be doing. It feels like people are no longer analyzing prices. All they care about is analyzing the goddamn momentum. Like, momentum is bullish, let's buy the shit. Momentum is bearish, let's sell the shit. They don't nearly make it rational any fucking way. It feels like the prices we have doesn't matter. All it matters is people following others. That's freakingly dangerous because we're not supposed to be doing this. Trader's job is to find a decent price to either buy or sell, and not to just follow blindly like sheeps, following what you've been told to go. All right. So anyway, we'll see how long this can last. Still the problem with the dollar. I'm sorry, yes, but I never expected us to go anywhere there. All right, we've had 3 sets of wave going to the downside, so it shouldn't ever retrace to those prices. We're 2 waves to the upside right now, so if we ever break this resistance, yes, I'm definitely going to have to trigger some losses out of euro dollar just after doing it on GBP USD. But yes, if I'm wrong, I'm wrong. But we can also get there like trying to do everything we can to fuck up the bulls, fuck up the dollar bears, and we just reverse out of the lost glimpse. Like we get to the resistance, it doesn't work out, the Fed reverses, and we're there in a couple weeks. I wouldn't necessarily be surprised about it, all right? All I care is for us to accumulate in this area. More likely you take the 4-hour fucking range and you go sideways in there, all right? So we tried, we really banged. I mean, look how freakingly huge we've been breaking down in here. So normally this is setting things for a bearish range. So I can hardly understand why we didn't found some strong bearish demand in here. And until then, we had some decent hope that the market could sustain this movement. That's just freakingly stupid, all right? So from what we've seen, I don't understand those movements. I don't really understand that. Like I said, this target is absolutely not viable. This is part of the things that will disappear from the next update. But still, what we have in here, kind of a concern. Really kind of a concern to me. I don't nearly understand what the hell's going on. Like, this is a mess, but like I said, it's not a technical kind of mess. It's a psychological, fundamentally altered kind of mess because it's just because of central banks. So it's about talking, and I hate that because, yes, talking is the only thing I can't manage as a risk management in my strategy. It just depends on whatever the fuck the central bankers will say and how algorithms will take that out. So it's a matter of interpretations, and I can't stress anymore how stupid that is to me. That's not how the market is supposed to work. But still, this could be the end of new paradigms era. I've never traded this. I'm learning hard on this way. So yes, you know what I'm doing. Whenever those scenarios validate, I'm going to have huge leverages on this one. But until they actually validates, which we're failing so far, and that's the big problem. I mean, getting in here today, it clearly is a validation to me. But going in there is like validation, invalidation, validation, invalidation, validation, invalidation. This market just drives me crazy. But obviously at some point we're going to get validation, confirmation, and absolute mess afterwards. But until then, I can't know for sure, which means absolutely respecting the strategy. If taking some losses is down the corner, I'll do it. All right, I'm not fighting with the market. If it proves me wrong, I'll definitely trigger some losses, at least reduce my leverage until I get to be proven right again.